Why do I find this stock interesting? Let's see the numbers. Okay, so the price currently is 20 bucks. Industry weekly performance, industry monthly performance. Okay, these numbers are fine. It was falling for the long time, but now it kind of consolidated for half of the year. Founded 2006. Let's see the insider transactions. There was huge sell-off since it entered stock market. Directors, presidents, CEOs, but now head of BAS BS program. Now head of BS program just bought some shares for $100,000. Was he selling before? No, he hasn't sold before. This is a good sign. The most interesting stuff about the company is there are two things. One is the numbers, and second thing is that they are a pioneer in their technology, and a lot of green stuff are screening in my tool. And so this is what I want to see when investing in a company. It's after blackout, good volume. It's not a leader, but this is a small cap, so I'm not really looking at that at this moment. Big free float. It's really undervalued. PEG of 0.03. I must check it. Its price to earnings is 6 compared to 40 for this industry. There is a huge CAGR 200 growth. It's rising revenues each year. It doesn't have strong balance sheet, but I find this company to be a fast grower. In a second, we'll take a look at the numbers. So I don't really care if it can pay its debts right now because due to the fact this is a fast grower. But it can pay its short-term debt, which is pretty important for this kind of company. And still, there are some greenish here. It has $200 million of cash and only $60 million of short-term debt. The total equity is $300 million. The company is evaluated at 800 millions, so this is pretty cheap. It's not buying back shares, though. In 2023 it had some buyback program running, so from time to time they are doing it. They are just not doing it continuously. It's not paying dividend. Is it diluting shares? Yeah, about the total shares outstanding, this is not really the case because this is due to the acquisitions. I haven't found anything related to shares diluting. And let's take a look at the numbers. It's growing super fast, which is also always not that good, but for this size of company, this growth might be pretty normal. It's increasing its expenses as well pretty fast, but this is fine. Net earnings don't really matter at this point, but we can see, net earnings don't really matter at this point in terms of a fast grower, but we can see they are pretty big, and the price earning is only 6. The operating income is fine. The company, this is good that the company is using the debt to fund its operations. So this is fine. I will show in a second that this debt is a bank debt. It had good cash flows. The margins are currently something around 13. In the past it was lower. It's growing its equity really fast. So the numbers are just awesome, I must say. Okay, let's take a look at the quote. Root 2000, forward P is even lesser. The PEG is super small for this kind of company, so this might be a great opportunity to buy. 1,300 employees. there is 30% of insiders owning it, and only 30% of institutional coverage it has. So not many huge investors bought it already. I mean the funds. So this is something that I think Peter Lynch would really love. It's not performing very well this year. Yes, maybe probably because of the fact that it went like fourfold or almost like tenfold last time, so there was some sell-off in this year. But for now I haven't noticed anything related to the numbers. Okay, so the numbers look great. Let's see the latest financial reports, and so we can tell more about this company. I will use the financial reports AI Reader in Financial Panda tool. I recommend that. Okay, so we got the annual report. Let's examine the annual report. As you can see, there is this 10K, and this tool is just reading its data. It's pretty old, it's 2023, but we'll see what the company is about. GigaCloud Technology operates a B2B e-commerce platform for large parcel merchandise connecting manufacturers, primarily in Asia. This is super important, with resellers, primarily in the USA, Asia and Europe. The company initially focused on the global furniture market, but has since expanded into home appliances and fitness equipment. In 2023, 70% of total revenues came from 1P revenues through the GigaCloud marketplace and third-party e-commerce websites. The company operates in the US, Japan, UK, Germany and Canada. It also sources products from manufacturers in mainland China, Vietnam and Malaysia. Okay, the numbers we already covered. What they completed. They completed the acquisition of Noble House. This is not super important because this is 2023, so we won't we'll omit that. Roadmap. Broaden the suppliers base into India. Expand the service and market into Canada, attracting more sellers and buyers to the marketplace. Transform GigaCloud Marketplace into a user-friendly platform that seamlessly connects with customers, ensuring okay. New product services, acquisition, okay, so no product and services for now. Shareholder changes. Share repurchase program, this is what I mentioned before. Currently anticipates retaining future funding for business development and expansion, that's cool. Competitors. Furniture stores, big box retailers, online e-commerce platforms. What are the unique selling points? Unique selling points are global end-to-end e-commerce solutions. AI-powered warehousing management system, that's pretty interesting. I don't see anything super unique for this company, I think, at least from this report. Except for the fact that they say they are a pioneer in being the middleman. Basically, this company is a middleman between Asia and resellers, mostly in USA. Management. Let's see if we can trust this. Let's examine if we can trust this management. These guys' names look pretty Asian, so probably this is not his photo. Neither does this. CTO sells shares on December 2024. Discusses risk of the listing. It's secure from the listing. Okay, so this is about the IPO issues, but as you can see, it hasn't got delisted. Let's see something more recent. Okay, let's see their webpage. Reimagining global B2B. GigaCloud Marketplace offers a seamless end-to-end experience that includes discovery, payments, logistics solutions on a user-friendly platform. What others think about this company?
GigaCloud's operations reside in China, which makes the company unattractive to many investors, and the company was late to file its 10K annual report. The bookrunner for GigaCloud's IPO, Aegis Capital, also has a poor reputation, while Culper Research claims that GigaCloud's warehouses are simply not busy enough for a company of its size. However, the argument that GigaCloud is another China-based fraud has some flaws. Over the past year, GigaCloud has moved its headquarters to California, so it now has the same reporting requirements as other US companies. Giga has spent $100 million buying 2 US operations, Noble House and Wondersign, and spot checks on its warehouse facilities appear to debunk the short report. And although GigaCloud's financials are audited by a Chinese subsidiary of KPMG, the company says it is exploring the option of a US-based auditor. So GigaCloud stock is cheap because investors don't trust the business. But as GigaCloud distances itself from China, it starts to regain trust, which is why the stock is up 300% since October. Unless growth collapses or we learn about some new hidden risk, there's every chance this stock can continue its impressive rally.
Okay, so basically the numbers are awesome. The risks are getting smaller and smaller. The board is fine. There is an insider buying. There is huge potential for growth. It might be quite risky a bit. Okay, let's see the company ratios and see if this is a good moment to buy. I mean, is it relatively cheap to the history? Okay, let's go to the price ratios. PE ratio is not really super cool for the fast grower, but as we can see, it's almost 50% down from its top. Something a bit better is price to sell ratio, which is also like 60% of its ATH. Oh, sorry, this is stock price. Price sales ratio is, yeah, it's like almost 50% of its top. What are the margins in terms of history? Net is 10%, operating 12, gross almost 30. This is cool. Okay, there is no huge difference between basic APS and APS earning per share, so it's fine in terms of proper shares, I mean the outstanding shares. The growth is really really big. Let's examine this company looking at the quarterly growth. It's increasing total assets, increasing cash on hand, liabilities, okay, shareholder equity increasing. What are the cash flows? Net income is growing, like everything is just growing. This is something what many investors like, so return of assets. I don't really find a good reason not to invest in this company. Yeah, so that would be it for this analysis. Cheers guys!